My name is Nick Milanovic, and I'm really excited to have you all here today. I'm the CEO and founder of This Week in Fintech, and we are going to be talking today about bank fintech partnerships and best practices for moving your fintech to the US. In December, we published a piece of This Week in Fintech working with Visa called How Can a Fintech Be Bank Ready for the US Market? We had a lot of responses to that piece when we published it from people on Twitter, on LinkedIn, who had their own stories and their own issues with expanding into the US. There are a lot of non-obvious challenges moving to the US as a market. And I've personally worked with fintechs before that think, okay, the US is a great market to capture. So wherever we start, we need to make sure that our next expansion is into the US. But when you expand into the US, you're really expanding into sometimes 50 countries, depending on what your product type is and the regulations state by state. It's also a very different market than even its adjacent markets. And so working with good partners really creates good outcomes. I'm very excited today to be joined by Joe Marintet from Visa, who's been leading relationships there for 13 years, and Macarena Valdez from Cross River Bank, who worked very closely with Visa. We're going to dive into a couple of questions, and then we're going to open it up to the audience to ask any public questions. But first, I thought it'd be helpful to hand it off to our two great speakers today to get a little bit more of their background so you know who you're listening to. Macarena, maybe you'd like to start it off.
Absolutely. So thank you for having us on this forum. I'm looking forward to the conversation. My role here at Cross River Bank is as the VP of Business Development for all of our fintech banking solutions at the bank. And that essentially covers our payments programs, our lending programs, our cards and accounts programs. A major milestone for me at Cross River that I've been here at Cross River now for 4 years is playing a pivotal role on building out the current Build card, which is a secured card designed to assist cardholders in building credit. And prior to joining Cross River, I was fortunate to work for TMX Finance, a company who provided lending alternatives to the underbanked and underserved communities, where I led relationship sales training and product sales enablement as a district director of operations. I currently reside in San Antonio, Texas. And a fun fact about me is that I've always dreamed of being a rock star, but I play a very mean air guitar. That's the extent of my talent for music.
Joe, would love to get
Very
your
good.
background
Hey,
as well. I know you're a Visa lifer.
I am. Yeah, very excited to be here today. And thank you so much to Nick and This Week in Fintech for having me join and be able to speak on this topic to your audience. So I'm Joe Marintet. I've been with Visa for about 14 years in various roles. For the past 5 years, I've been under our U.S. financial sales team, specifically supporting the sponsor bank relationships. So banks like Cross River that predominantly have their business line with Visa be for sponsoring fintech companies. These are the types of partners that I work with. And when thinking about my role, I do have a unique perspective on this topic in particular because I am not working directly with fintech companies. While we do meet and consult with a lot of our Visa fintech partners, the main partners that I deal with on a day-to-day basis are the sponsor banks or the partner banks or whatever name you want to call them that support the fintech programs in the U.S. market. So through the conversation today, I'll be answering the questions from my perspective through this lens, and we'll share some common themes across what I've seen with my banking partners.
Awesome. Well, I see that we have 65 people in the conversation now, and that number continues to go up as we get a little bit more into the hour. And so I'm very excited to kick off this conversation for the sake of all of our listeners here today. Bank fintech partnerships, sponsor bank relationships have been a particularly big topic in fintech over the last couple of years. And I think one of the reasons that this has become such a big topic is because we saw an explosion in fintechs working with different bank sponsors, and then a little bit of a contraction as regulators took a renewed interest in understanding the look-through exposures of bank sponsors and the underlying program managers that they were working with. What does this all mean? It means that if you're a bank sponsor, you effectively have to act as the enforcer for the relative prudential regulatory group that oversees the fintech companies that you're working with. And so it's a very, very high hurdle to clear, being able to actually find a good bank sponsor who you can work with to launch a new product in the US, especially because fintech prides itself on really pushing boundaries. So we're not just recreating products that exist out there. We're really building net new products because we're trying to improve financial services for our end users. And that kind of opportunity always carries a novel kind of risk. And so finding the right sponsor bank and the right partner bank is really important to that. All of this brings me to my first question for our team today. And Mac, maybe I can start with you. The competition for sponsored banks is now fierce. There's definitely more demand than there is supply. So, in this atmosphere, being bank ready is key. I'd love to hear from you how you would break down bank readiness. When can a fintech program approach a bank to work with them?
That's a great question. And we come across many different types of fintechs, not just in terms of their stage of where they are in their development cycle or in their construction of a product or program that they're trying to deliver down to those end users. And what I've been able to gain from that experience and seeing different fintechs at all different stages as they are maturing while they're developing these products is that I've learned that there are some key areas that they should have ready for a true implementation with a bank and be ready for what we call a direct to bank relationship. And so one of those fields or one of those key factors is do they have a third party risk management structure set up? Have they stood up this program? Because regulators do require that you know exactly who you're conducting business with. So they have partners and vendors that support their entire scheme and construct that they're creating, and having that reputable third party risk management ensures that they're conducting business with partners and vendors that are reputable, that are aware of how certain services should be protected for those end user consumers interacting with that product. Are they conducting regular due diligence on those third party providers because they handle lots of sensitive information? Are they ready to share that due diligence information with us as your partner? Outside of third party risk management, I'd say that the next big step is, do they have a use case clearly defined? Do they know who they are targeting as their customer? Do they know what technology, features, or services distinguish them from the market or to give them a competitive advantage? They should be prepared to share existing customer acquisition metrics, projected program growth, have their marketing and customer acquisition plan ready, because that's part of our review process. And besides ensuring that it's a program that's going to scale and grow a program, we want to ensure that it's compliant as well. Know how you want to change or upgrade your program in the next 12 to 24 months so you can ask and involve a prospective bank partner through those conversations as well. So you're building out a foundationally strong program that's going to be able to support what that future program is going to look like in 1 to 2 years. There's definitely more points to go through. So in terms of financial stability, we need to ensure as a bank that the fintechs are financially stable today and in the foreseeable future. We have to ensure that they have recently audited financial statements and that they're available to us. Ensure that they are able to explain how they plan to fund their operation during the next 2 to 3 years. And then the big topic here is legal and compliance. So has the team studied the use case well and anticipated legal and compliance requirements and issues? What is the talent depth of their compliance team? Do they have relevant experience? Have they created a compliance program that institutes risk-based policies, procedures to comply with applicable laws, regs, and network guidelines?
Really solid answers. And I see we're up to 70 people in the audience now, so let's keep it going. Joe, I'd love to flip that question over to you. What does bank readiness mean for Visa?
Yeah, I think Mac had a lot of really good points, and I'll probably emphasize on a few of those well. But from the network perspective, to me, what bank readiness means is showing up as an institution grade partner from day one. Whether you're looking to issue a Visa card program, establish a US-based processing endpoint, or become an enabler for a Visa direct money movement solution, sponsor banks are looking for proof that a fintech has operational maturity, that they have compliance discipline, and that they are willing to provide the transparency to shoulder some of the regulatory expectations that the bank, along with the fintech partner, will tackle together. So when I think about this, I would really break it down into 4 factors. The first being regulatory alignment. Is there a clear documented understanding of BSA AML, Reg E, Reg Z, the state requirements that are tied to your product, as well as having an ability to speak fluently about the risks and the controls if an issue should ever arise? The second piece would be operational maturity. Do you have repeatable workflows? Do you have a case management process? Do you have a reconciliation process, as well as audit trails? All of these would be necessary to have readily available if asked, and we'll have to have a smooth process to be able to provide these to the bank. which kind of leads into the third factor, which is data transparency and reporting. There will need to be a clean pipeline of data that's accessible at the bank, available in dashboards that are very easy to interpret when being sent and provided to the banking partner, as well as a willingness to provide granular reporting in formats that and in the local language that the sponsor banks are expecting. And then the final piece would be financial stability and forecasting. Do you have a transparent financial model with clear unit economics? Can you show evidence of runway and the capital planning to sustain that growth over the years? All of these factors will show the bank that you have a clear go-to-market strategy. And if there are gaps, partners like Mac at Cross River are great at consulting to find solutions. They understand the U.S. regulatory landscape, and if necessary, they can help identify gaps that can be solved with either Cross River solutions, or they can recommend third parties that can help resolve these issues as well.
This is bringing back fond memories of leading user acceptance testing at Pedal when we were issuing a credit card that used cash flow data to underwrite people. It was a much longer process than we anticipated. We were not, I will say, bank ready when we began. By the end, we were definitely bank ready. Visa touched on similar opportunities and similar workflows in the report that you recently published. And you talked about Joe, I'm not going to put you on the spot, but the whole Visa team talked about a 3-tier compliance system in fintech operations, bank oversight, and independent auditors. So Mac, maybe I'll flip it back over to you. If you're a fintech and you're setting up this 3-tier system, what variables do you look for to help customize the particular partnership?
Sure. I would say that one of the things that happens when banks try to operationalize this 3-line approach that's also echoed by regulators is that the biggest mistake is implementing it uniformly across all types of customers and programs. The strongest programs tune those controls to partnership risk. And we at Cross River look at a customer risk profile, also known as who the fintech serves. Cross River will look closely at end customer types. So who is that end customer? A consumer, a small business? Is a customer of ours a white label platform? Are they playing in the international space, domestic only versus cross-border end users activity? Are they crypto-linked users? And that helps us start creating what that risk profile of that end user interaction is going to be. Beyond that, we look at the market segment that certain, as an example, payment rails are going to be navigating in. So as an example, using Visa Direct for a domestic OCT transaction to do a payout, there is a different lens that we review from a risk profile and a compliance profile when we're doing a send transaction for a money remittance use case versus a B2B supplier payment. And we review those differently and adjust our diligence and risk assessment based on that market segment of how that rail is going to be used. It's the same rail, but it's used differently depending on the type of market segment or use case. Those market segments can be verticals like gig economies, gaming, payroll, EWA, the list goes on. Ultimately, what we look for is to see if our partner has also those risk-based policies and procedures based on who they serve, how they serve them, and where they serve them. We take it deeper than that, and we look at roles and responsibilities to determine how we, the bank, operationalizes oversight of that fintech program. As an example, a bank would look at who controls the onboarding UX or decisioning logic. Where do the transaction monitoring rules live? How information about senders, receivers, transaction activity between our banking core and the fintech's systems are shared and maintained. And then lastly, I would say that we look at a fintech's maturity and operating history. By reviewing their historical performance, quality of prior audits, remediation steps they've taken, do they have a change management and TPRM process in place, a reporting structure to address findings, training programs to maintain their compliance programs. Ultimately, that bank oversight is customized to mirror regulator exams, and a fintech needs to take steps to operationalize their policies on a daily basis.
I feel like there are some really good actionable examples there. And our definition of what a fintech company is continues to expand every year. There's different hot product categories. You know, you talked about lending and gig wage economy payments, but this year you'd also probably put like prediction markets in there. You may put sports betting in there. You may put stablecoin issuers in there. basically anybody who is handling money on behalf of users needs to adhere to these same requirements. And a lot of that is dependent on the relationship with partner banks like Cross River. Joe, maybe turning this question over to you. I know that this report on bank partner relationships came from Visa. Very curious to hear a little bit more about your breakdown of this three-tier system for being bank ready.
Yeah, and I think Mac answered that question really well. A lot of the factors that I was going to go through, she touched on, but specifically from the Visa perspective and the network perspective, protecting our network is the top priority. And while we have a large team of risk and compliance folks that are constantly monitoring the network to ensure that every transaction that flows through is safe and compliant, we rely heavily on our banking partners to perform the upfront due diligence of a fintech program before bringing it to the network. And in my experience, I've seen the most success in programs that focus their compliance efforts by matching their controls to the business model risk, the operational complexity, and the regulatory exposure. So to break that down a little bit, some of the key variables to assess are things that Mac just touched on, so I'll quickly go through them. But business model and product risk. Is the fintech operating deposits? Are they accepting payments? Are they lending? Is it a crypto linked product? Because each of these will carry different levels of inherent risks. The customer profile is also very important. Is this a consumer solution? Is it a small business solution? Are you operating in high risk verticals? And depending on the answers to these questions, the KYC intensity will vary for each of those. In addition to the actual risk and the profile, there's the operational capabilities and tooling. Is there sophisticated tooling in place that will reduce the burden of bank oversight? And if not, have you reviewed the gaps in your process to determine where you can internally strengthen this with your fintech operations team versus having the bank to have to lean in and provide the oversight necessary to run a successful program? These are both very important questions to ask yourself early on in the process. The final 2 points are risk appetite alignment. Some sponsor banks are risk forward, others are more conservative. So you have to be very open up front about any of the high risk verticals on your roadmap and how important those are to the actual success of the overall program. And then the final point would be on scale and growth expectations. Mature programs that have much higher volumes will demand automated controls, while early stage programs might need a little bit more hands-on bank oversight until they're able to scale to that level. But this is a non-exhaustive list. There's a lot more that we could cover in this section, and it really will vary depending on each business model. But to summarize the point, it's very important to tackle compliance early on and to continue to review the policies and procedures on an ongoing nature so the program can meet the evolving regulatory and network requirements and will help avoid any type of regulatory consent order for the banks, any type of network compliance program that you might find yourself into, and avoid future remediation efforts in the future.
Makes sense. I think people's ears are burning because we see people keep trickling into the group. It's great to see more people showing up as we get a little bit closer to our questions. We're also getting a couple of questions from people in the audience. And so hang tight. We're almost through the pre-recorded questions and we're going to be getting to audience questions very soon. Joe, maybe I can pick on you again. I would love to get a little bit better understanding of where we are in the moment with bank fintech partnerships. And what I mean by that is banking as a service, as anybody who's been in fintech for a little while, has had some decent failures with different banking as a service providers that have led to greater scrutiny of fintechs. So what needs to change moving forwards? What needs to be in place to reassure regulators? And what have you seen change over the last 2 years as a lot of banking as a service platforms and a lot of fintechs have really sharpened their regulatory strategy?
Yeah, I mean, to your point, Nick, if you've been in this space over the past 2 years or so, especially in the US market, it has been explicit across the board with all of the fintech partner banks that the regulatory expectations have changed, especially on third-party risk management and AML delegation. The regulators are now looking for embedded governance, real-time visibility into data, not just a monthly Excel dump of what you happen to have on hand. And they're also looking for evidence that the banks are truly in control of the programs that they sponsor. The banks themselves are facing a significantly higher level of scrutiny during the exams. So fintechs must now behave like they are extensions of the bank and not just partners of the bank. And there's a few things that must be in place today to meet those expectations. The first being an end-to-end BSA AML ownership policy with a very clear delineation of who's responsible for what. The second would be ongoing monitoring and testing with continuous control testing, not just annual check-ins, which leads to the third point, which is full data access for the bank, either real-time or near real-time access to transactions, complaints, any onboarding decisions, ultimately no black boxes between you and your banking partner. The fourth is documented third-party risk management policies with contracts in place that state who is responsible for what. And then the fourth part being governance and issue escalation. There must be joint governance committees across the partnership through risk, compliance, operations. And for issue escalations, there must be a routinely documented conversations and follow-ups that regulators can review if they're asked for them. And these are the types of the things that will show the bank that you're already acting like a regulated entity, which will result in faster approvals and speed to market.
Back on the bank side, also curious what you've seen change in the last couple of years and what you think still needs to change in order for fintechs to be more bank ready in this environment.
Sure. I mean, we can all agree that public BaaS failures made one thing very clear. Confusion over money movement is unacceptable. At Cross River, our API first banking core, subledger and processing capabilities for solutions like Visa Direct for both our domestic and cross-border payments enables us to have a direct line of sight into the transaction end to end. What we feel that systems like that can offer is that it allows for clean, reconcilable funds flow visibility to ensure a clear separation of customer funds, operating funds, and program reserves. In our pure BIN sponsor models, we also ensure a fintech partner is set up to support daily reconciliation requirements, which we thoroughly test and maintain ongoing oversight of. And what I would say is very top of mind and proves to us that a fintech partner is mature enough for a direct-to-bank relationship is a fintech who has dedicated time and research in choosing the right partners that are able to provide those types of services through reputable ledgering and reporting capabilities and proven models that work. And that they take that seriously. Because our bank is uniquely positioned with our own API first banking core that is unique across other similar bank or BIN sponsors. We know firsthand from a tech perspective, from a reporting perspective, from a legal and compliance perspective, how that reporting and visibility into the money movement should work. And so when you're bringing in your own solution to that, to incorporate into our bank sponsor model, and you're leveraging your technology and your fintech system heavily, then we can clearly see if you are maintaining the appropriate records, and we can help collaborate with you to ensure that you're setting up a foundationally strong program from that perspective. And we will challenge our fintech partners to ensure that they're looking into their structures and setups to ensure that they're building something out that can stand up to regulators' oversight.
All right, my last question before we open it up. Mac, maybe we can keep going with you to get the Cross River perspective here. It's not just fintechs that need to invest a lot to set themselves up for partnership. It's also the banks. So considering the upfront investment that Cross River needs to make in order to be ready to partner with fintechs and take them on as a sponsor for fintech program managers, when you're choosing fintech partners, what are the work culture expectations that you look for that make good partners?
Sure. I mean, based on my experience, how I would define a successful fintech partner, which ultimately means, or it equals to a successful revenue generating fintech program, is one who has a culture that values a collaborative solution-based approach. Good partners expect findings. They fix repeat issues fast, don't litigate basic control requirements. And as a bank, we don't expect perfection, but we do expect accountability and openness when something breaks. Given the investment that we make in a program, we want our partners who have a plan for scale. So can your systems, controls, et cetera, scale to match your growth? Are you planning for a multi-year relationship? And I feel this is really important because it drives the intent behind your interactions, that you're looking to build and grow a partnership. And that's where you're coming from when you're looking to solution something that you're working through. And then lastly is treat the bank brand as it's yours to protect.
Joe, maybe we can get some closing thoughts for you.
Yeah, one of the most common pieces of feedback I hear from fintechs in this space is once they establish a relationship with a bank, the due diligence process with the banks can be onerous, or it could potentially be taking too long, or it's delaying their speed to market. And in a lot of cases, fintechs will come, if they have one, directly to their account executive at Visa and ask us to influence the banks to speed up their process. And I'm here today to tell the audience that this does not work. I will say it again, it does not work, and it will not speed up the process. The work that's done by the banks during the due diligence process is vitally important to the overall ecosystem, and we will support what they need to do to protect their business. The banks are looking for fintechs whose principles reflect, as to Mac's points, maturity, transparency, and accountability. And some of the key traits I've seen across my partners and what they're looking for are just that. The first point being transparency and coachability. Is there an early escalation of issues? There cannot be any type of hiding or we'll fix it later mentality in these types of relationships. There has to be an openness to bank feedback and a willingness to adjust fast and bring these issues to the banks early on so you can find a path to resolving them. The second piece would be operational humility. Understanding that the bank has non-negotiable rules. There are certain situations where there will be no shortcuts, no workarounds, and you will have to be able to adjust accordingly to meet the bank standards. And then the final point is long-term partnership mentality. Being willing to invest in things like additional controls, additional headcount as the program scales to ultimately look for sustainable growth over rapid growth and have this be a relationship that can stand the test of time for many years. And if you can grasp all these concepts, and if you can look at and view the bank as an invested partner in your program versus a blocker that is holding you back from your goals, this will likely lead to a very fruitful relationship that can span many, many years to come.
All right on time. We just hit the 30-minute mark, and so now we're going to open it up to the audience for questions. It's like everybody here has done this before. If you are dialing in and you have questions for either Joe at Visa or Mac at Cross River about working with a bank, finding a bank sponsor, and moving your fintech to the US, there's a little chat button in the lower right corner of your screen. Feel free to hit that and enter the public chat and drop your question to the side, and we'll make sure that it gets answered. So our first one comes from Sapan, who says, we are an early stage startup from India. We're an early stage startup from India with limited operational history. How do you expect early stage companies to navigate this, as operational history is almost always non-existent? Context on us, we're helping Indian small businesses open a bank account in the United States. Mac, maybe we can start with you here.
Yeah, absolutely. We do find early stage companies that we're talking to in their initial, business development kind of discovery type of conversations. And there's a way to balance that. I'm going to answer that two ways. One is, do you have a team that has experience doing that for another program outside of the one that they're building today, that we know we can leverage, and you will leverage that experience to build out something that has been proven to work in your own professional experience and history? Are you partnered with advisors that bring in that deeper level of experience as well, especially performing here in the US with relevant regulatory US compliance experience? I would add to that if you find yourself where, just even from a capital perspective, where you're going to be dedicating your resources at this moment in time of where you are building out your team, let's say you want to dedicate your capital to acquiring a customer, building out your tech, creating features that are a value add in the market that is missing, and you want to fill that gap first. And you need to concentrate your capital and your resources to those work streams instead, is that there are partners in the market that are reputable program managers that can take on the operational and compliance responsibilities for you, while you get to focus on your main work streams, which is acquiring the customer and building out great tech. And we've seen that work as well. It is a choice a fintech has to make.
Yeah, and Mac took my answer there a little bit. I was going to also say the program manager route, especially in the US market, is a very popular, and there are a lot of options across different types of business models depending on what you're looking to do, but they can really take over the operational burden for a program that might not have the headcount to do so today or the experience. And then outside of the program managers, at the network side, we do work with a number of third-party consultants that we could potentially recommend that have experience working with banks, setting up these policies and procedures, and they're great partners of ours that do really great work.
That's awesome. Any specific consultants that you would recommend?
I won't give any shout outs, but if you reach out to me directly, I can point you in the right direction.
Fair enough. That's good enough. We'll share around the best way to reach out to Joe and Mac after this call. I'm getting a couple questions DM'd to me. This next one is from Bernardo, who is based in Brazil. He says, our lender is looking to better serve our customers who are based in the US. How important is language conversion for a company that has a product that is not primarily operated in English? What do we need to change? What do we need to know?
Yeah, I'll take the first stab at that one. It is important, and I'll actually go beyond. Is the policies and procedures that a bank is going to be reviewing? Is it translated to the degree that we understand the spirit of the procedure regulation pillar that you're trying to uphold within that policy and procedure? But beyond that, what we have seen from experience is that many times these policies are global policies that don't necessarily address US specific regs, and they need to be. So if you're in that stage and you haven't taken that step to do so, you want to do that before you engage with a bank partner, to make sure that you're ready for their full due diligence review, and you're not you're not going to meet that minimum bank requirement because you're missing the special call outs for specific US regs and policies.
Joe, anything to add there?
Yeah, I completely agree with Mac's take on that question. I will just say from firsthand experience, I've seen this particular topic delay a launch by months because either there's a lack of understanding. If things are sent over in Portuguese, there's likely somebody at the bank that cannot read or speak Portuguese. So then they need to go through a translation process. It can potentially add weeks and months to the end goal of launching the program. So it's an important thing. And really, that's the only other additional piece I'd add on top of what Mac already said.
We have another question in the audience from Hemant, who says, what role can tech providers like lending platforms and BaaS to fintechs play in making the process helpful to fintechs? So this kind of like broad range of middleware providers who conventionally sit between banks and the fintech partners that they work with. What role can they play in the process, but being helpful to fintechs?
A wide range of middleware players, from one side of it on a conservative compliance first, operational first approach. Those middleware providers actually do provide end-to-end support, from collecting CIP, running sanction screening, running KYC, in the middle managing customer service, and at the end, how handling the end of a life cycle of a customer on the back end. And anything in between. I've also seen the other version where middleware is more of a tech integration layer, and the onus for the operational and compliance support of a program still lies on the fintech. And I think when you are exploring your middleware providers is, one, know what your strengths will be and what you want to continue to own and maintain. And so you know what that middleware provider can come in and plug in for you. And I'll take it a step further, because we're the bank and we see all different versions of these relationships, is be very clear about the roles and responsibilities of what you're performing as a fintech, what your middleware and partners are performing on your behalf, and then ultimately what you'll need the bank to do as well. Painting that picture early on in conversations is going to help in a lot of times of onboarding and understanding who's responsible for what and the level of oversight that needs to be performed on every party involved.
Yeah, I need to start answering some of these questions first. But I agree with what Max said. It's finding and understanding the roles and responsibilities of both the bank and the fintech partner so you can communicate. And because in many ways the middleware provider is the connection between the bank and the fintech company for some relationships, so making sure that you fully understand the expectations on the bank side as well as the fintech side is significantly important. But then also understanding the network requirements. We have different capital requirements for different types of banks that want to be sponsor banks with Visa. We also have requirements for fintechs entering certain lines of business across issuing and acceptance. So really understanding the role that you're playing and what your partners are trying to solve for will avoid any type of confusion, misalignment, and will ultimately result in a faster speed to market.
I need to find some questions where I can get you to disagree on something. But I like the alignment, though. A couple of procedural questions that we're getting in the chat. For people who couldn't attend today or anybody wants a recording, we will send around a recording afterwards. We'll also let you know the best ways to reach out to Mac and Joe after the call. And Sadia asked for any recommendations on newsletters or blogs where we can subscribe for the latest updates on regulatory and compliance. I am obviously incredibly biased when I answer this, but I will say that we just launched a new This Week in Fraud newsletter at This Week in Fintech. And we also have a great partner series that we're working on with Visa, where we come out with the first update focused on bank fintech partnerships. And what we're going to be doing working with the Visa Direct team over the next year is publishing more guidance on how banks can effectively work with fintechs as partners and how fintechs in turn can make sure that they're bank ready working with partners like Visa. Okay, possibly the last question that we have from our audience right now. This one was also DM'd to me from Santi, who says he's based in Mexico City. Maybe, Joe, we can start. We'll start with you this time, and you won't get front run by Mac giving a perfect answer. Santi said, our company works with stablecoins. We know that Visa does a lot of work in this space. If we think about expanding to the US, we'd love to understand how we could work with Visa and Cross River. What's your orientation around stablecoin companies?
It's a great timed question, and Cross River is one of our closest partners that we're working with today on the stablecoin initiative. So happy to connect with you. Broadly from Visa, although it's an emerging market, it's something we've been heavily invested in for a number of years. We're looking at a bunch of solutions across settlement, across card issuing products, and the endless possibilities that there could be in the digital asset and crypto space. And like I said before, Cross River is one of our top partners in this space, and really excited for all the things that we're building with them.
Thank you. We are. Actually, stablecoin and anything related to a digital asset conversation is something that we're very excited about, not just me personally, but at the bank level. We have a large initiative to help bring the validity of a bank partner supporting anything to do with stablecoins and to ensure that we're bringing the same level of understanding of our responsibility to ensure that a program is compliant and supported from a foundationally strong place that a bank would bring to that work stream or that scheme and that end-to-end process. What I'll add to that is that what we're seeing is stable coins are going to help solve for a few things. One is all consumers out in market today, they need access to money and they want to send money and they need it yesterday and they want it now. And stablecoin is helping narrow down the speed of that money movement and really has the opportunity of achieving real-time money movement. And we feel very strongly about finding solutions and constructs and programs that are looking to create creative ways to hang together a typical fiat bank solution, but powering it with stable behind the scenes or on chain to create those efficiencies that ultimately get trickled down as economic savings that get trickled down to those end users.
Sounds good. All right. We have one more question stuck over the finish line. Hopefully we can find some time to address this. Do banks in the US prefer starting the partnership where the data transfer happens from SFT happens through SFTP to begin with, and then moves to APIs after 12 to 18 months after the relationship's more stable. Checking in because that's how a lot of banks in Southeast Asia and the Middle East work. This is beyond my technical skis, but Mac, kind of curious to hear if there are any kind of minimum requirements for data transmission standards with your fintech partners.
Sure. I can take that. I mean, we have bank sponsors at large, and then I'll explain how Cross River handles it. But bank partners at large handle receiving data elements via files, meaning that there is a secured SFTP endpoint that's been set up, and you as a fintech are pushing that requirement down to that SFTP endpoint for the bank to then capture that data and ingest it to be able to execute the instructions you've given us. That is one set of bank partners that does that. We are a very much API first enabled shop. And although we can support file-based systems for certain features, to get access to all of our different banking technologies that we have and the full scale and scope of our tech stack that we built, from all the money movement, payment rails available in the US to all of the different types of accounts and card solutions, is definitely starting with API first. We see that many of our partners can choose a phase one approach, and part of the onboarding can be API based and part of it can be file based to start. But ultimately, our preference will always be API first. It's much more scalable, less operational humans involved in making sure that a system is working. And we essentially are able to accomplish near real time, if not real time, transaction activity and monitoring for your program to be scaling.
Makes sense. Well, that's a good one to end on. I'm sure that we have a lot more technical kind of one-off questions from people who are running different programs here in the audience. We will follow up with everybody. Thank you so much. This has been a really great conversation. We'll let you know how to reach out to Mac and Joe, how to get in touch with Cross River and Visa's teams that work with fintechs. Mac, Joe, I just want to say a huge thank you for making your time available. This has been a super insightful talk today, and I really appreciate it.
Thank you.
Thank you so much, everyone.